You darling, good to
Oh,
see you.
hi, how are you? How was your birthday?
Very good. It was a nice one. It was a really nice trip.
Oh,
Yeah, it
that's great.
was really nice. Yeah, I enjoyed it. We
Oh,
played
I'm so
Scrabble last night with my 11-year-old nephew. And
Oh,
that was just so fun. We had such a good time.
that's awesome.
Yeah. Hank, how are you, bud?
Good. Been busy. Had to rebuild the computer.
Yikes.
Yeah,
I hate when
Don't
that
you love
happens.
it when Bill Gates throws that at you?
yeah.
You got to go Mac, man.
No.
You gotta- Come on.
I told you I'm a leader, not a follower.
As you
It's like
rebuilding
that.
your computer.
Yeah, as I rebuild my computer, and I always get very irritated.
All right. Well, let's get started. I got to stop at the top of the hour because I got 3 more weeks of this class and I've got a bit more to do to be prepared, but I'll leave it with the incapable hands of Matt and Hank and anybody else and that's so equipped or interested. So let's get started. We want to also talk about the website a little bit as well. So let me get the disclaimer done. Stock, crypto, and options trading has large potential rewards, but also large potential risk. You must be aware of these risks and be willing to accept them in order to invest in the stock, crypto, and options market. Don't trade with money you cannot afford to lose. And this is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. Read the balance of the disclaimer if you wish on the recording. All prices in US dollars. If you didn't know that already. All right, we're going to do a market update here in a minute. Some things have happened today that I want to talk about. And then Gerardo, would you like to say a little bit about what's going on with our discussion boards? Because I know there's some questions about that.
Yeah, sure. We had been talking with the support of Kajabi, trying to fix the way all the posts had been arranged there, but apparently it's not a feature right now in Kajabi. So they will move the case to the development team, and hopefully soon they will fix it. Till now, we'll try to do our best to make it as easy for you as possible.
And we're also going to look at another third party to do discussion boards on another platform. So we're going to look at that as well, because it's really not very useful that the most recent posts aren't on the top, which is the main problem we're having. I didn't notice it until this week. It was strange. I was surprised to see that behavior. But that's Kajabi. Unfortunately, it's the platform that we selected. Didn't anticipate that being a problem, but we're going to fix it. No worries. Okay, let's please do a market update. You know, the little cats are chasing the laser pointer. And this morning, we had an economic report called the PMI, the Producer Management Index, and it's showing expansion. They were expecting 47, and it slightly expanded for the first time in a few months. The productivity is expanding in the U.S. Factory orders are up. Core capital equipment orders are up as well. So that's an indication that inflation is starting to abate. And of course, I shouldn't be so cynical, but you know, I got to stop doing that because I really want to start just trading what the markets are doing. And this is what's happened. All right, so we're now well above 410. We got super strong resistance right here, as well as 420. And Matt, if you want to show the, you know, I know you like the fib levels. If you'd like to pick that up and post a little bit about fib.
You're looking inside my mind already. I would love to share this. Would you mind just turning on sharing for us, Mike?
Oh yeah, let me do that. Sorry about that.
What a fabulous quorum we've got. Look at all these people coming in. It's great. We're getting more people coming in on video. We love to see you guys too. So if you're comfortable, please turn your video on.
See your beautiful faces.
I was thinking, Mike, on next week, I might try and do one of those virtual backgrounds for microwave trade coaching. Put the big logo over my shoulder.
Oh yeah, man. If you get that figured out, let me know. I'll use it.
I'll share it. This is the S&P 500. And as Mike was alluding to, look at today, closed right on that 50th percentile of that fib retracement level. And what's even more exciting for me is look at this, tapped it once, tapped it twice, almost got there. And then today we got there. Now,
Mhm.
whilst this suggests that, we've got super strong resistance, and it is super strong resistance, as Mike's talking to, there's a lot of catalysts that are sitting behind this. So I was watching CNBC earlier on, there's counter discussions, is this a short covering rally, or is this a result of earnings coming out that are better than expected? All these results that are now showing that inflation's starting to taper, the messaging from the Fed, it's still unknown. But one thing I do want to call out, and I've said it a couple of times now, divergent volume. And I learned this very early on in my trading journey. And essentially what this does is it forms a shark mouth, whereby this is the bottom part of the mouth, that's the top part of the mouth. And what normally happens? Slams shut,
Oh.
unless it doesn't.
Mhm.
So that was something that I learned very early on. So we'll see if that holds. Now, Mike, because I like fibs so well, and I'm not going to take too much on a market overview, but when we start tinkering through the rest of the indices, look at this, the IWM punched it 3 times and closed above it today. Then we go to the Qs. Check out the movement on the Qs today, right above the 50th percentile as well. So again, divergent volume across these indices. Will this be the time that the markets turn? Who knows? But I would encourage you, as I'm sure Mike, Hank, and the rest of us would, exercise caution in your risk profiling at the moment. And that's me.
Yeah, just in summary, I'd say the markets are doing what they're doing. They're rising. Some have broken resistance. The SPYs hasn't yet. The other 3 have. Cautiously bullish at the moment until you see some evidence of a break in this rally. For me, it screams loudly broken wing butterflies. All the strategies that we have. And this is, snipers is meant to be just credit spreads. Some people don't like the broken wing butterflies. Ultimately, it'll be a separate offering once we, if we decide to open this up to other people. But so that's why it's separate. And we're going to keep our eyes on the credit spreads for this. But in general, the other thing you could start thinking about is the iron condors that we did. We did one on Newmont mining. We're going to look at all those in a minute. So there's a lot we can do in this market. And, it always comes down to trade what you see, not what you hope, feel, think sometimes. You gotta trade what the market's giving you. And right now it's going up. And that's the truth of it. It's absolute. And eventually, I think we'll see another downturn, but I've been saying that, and it's been rising every day I've said that. So anyway, I'm good though. I think we're in a good shape. Our portfolio's doing well. Now remember, this call, everybody, this is really not about Matt and Mike and Hank just, giving you trades. It's really about you bringing your trades for group discussion, to build energy, to build contribution, and to really start to build this powerful energy spiral of momentum around trading. So please, if you have anything you want to discuss, there's been a lot of posts. Andrew, you had some posts on the board. Am, I saw you talking about something on the board as well. So if you have something you want to discuss as a group, please have it ready, have it up on your screen. And when it's time to share, we'll let you share. And again, if you ever want to say anything, just raise your hand, and Gerardo and Matt and whoever's not speaking will notice your hand, and we'll bring you into the conversation, preferably verbally as human beings. Okay, one other thing I checked just quickly was risk off. And this is an overlaid chart, gold, UUP. If you'd help setting that up, I can do it again. But you can see here that US dollar's gotten stronger and gold a little bit stronger. So I wouldn't call that risk off yet, but you got to keep an eye on that. If the US dollar starts getting stronger, gold along with it, the inverse relationship broken, perhaps an indication that money is flowing out of stocks into gold in a risk-off fashion. Let's look at the VIX. What's the VIX doing? The VIX should be dropping, and it has.
And it's down 8%, Mike.
That's a pretty, that's the biggest move we've had since here. And, in the last few days when the SPYs were dancing with 410, the VIX actually got a little higher, which had me suspect that perhaps another down leg might be coming. And then the PMI report comes out, and all the cats chase the laser pointer up in the markets. So that's kind of what happened. But the VIX is low now. It's getting into the low end of its range. And That's not bad for butterflies. We can trade butterflies in any environment, but in the event the market corrects, IV across the board will rise across all options, and that's something that we need to keep an eye on if we're trading theta positive strategies like credit spreads, condors, and butterflies, which is the bulk of what we do here. Okay, let's pop into the portfolio quickly. There's been some really good discussions on the boards and in the WhatsApp threads around potential adjustments. Those of you that did share in those two places, if you'd like to share publicly, it would be really of good service to the rest of the team here, including me. So this is our current portfolio. We've got a bunch of credit spreads, and then this last one down here on new mining is an iron condor. So I want to talk about that today a little bit, at least, is the power of, instead of going bearish with a bearish credit spread, consider also selling a put spread underneath. Under certain circumstances, new mining was a good example of that. So we're going to cover that one in a minute. Let's just quickly go through all of them here. Matt, I think you have one on BP as well, don't you?
Yeah, I sure do. And I just want to echo your sentiments as well, mate, on the boards. The level of engagement from everybody, both on, the WhatsApp group and the board is fantastic. And, we will try and give you insight into our thought process around why we make adjustments and what we look for, because it's sharing our thought process into, why we would make an adjustment or what we look at to help you grow through your trading journey as well.
Yeah, totally. Yeah, this thing is building. The energy in this group is building, and the more you contribute, everybody benefits. It's exponential. So as you all contributing.
I wake up in the morning to like 80 messages.
Hey, you get a Christmas present every morning when you wake up.
I do. It's great.
That's how I see it, Joe. I love it. It's so fun. Let's just go through the list here. BITO. BITO is fine. Nothing really to do on that. On these, everybody, please don't over adjust these. Let them do the work. Let statistical probability rule the day. I wanted to make this point. Pretty much all of you in this group have done the back test, 100 back tests, 100 live paper trade, or 25 live paper trades before you go live. That is at least the format that I like to take people through to get them prepared to trade in a live environment. And what you'll notice is if you did 100 of these in back test, you would probably notice that over time, maybe one or maybe two, 1.5 out of 10 are losing trades. Now this market is pretty crazy. Some nutty stuff's been happening. So you still don't want to throw that out with the bathwater, Let probability do its work. Don't adjust too soon. And so for me on this one, we're in good shape. Strong resistance at 15. I've got a broken wings on this and sideways butterflies on this that I'm trading currently. And we'll talk about those tomorrow. But, I don't do anything on this one until the stock starts to fill this gap. You still got super strong resistance at 16 at the bottom of these peaks. You got a double wide credit spread. So in the event the stock does recover, just let it breathe. Let it breathe. And unless it really starts making a strong run, I'm on this one, I'm pretty much not doing anything on it. I don't even think about it as long as the stock is beneath 19 in this case. 19 is right here. Well, let's see, the break even is 19.18. So it's just below that break even. I'm not going to do anything on this, nor do we have to in this case. Time is working for us. This is another one where you might even consider throwing a put credit spread underneath. And we're going to get to that. The last one I'll talk about is using iron condors with long-term credits, because you can over double your potential return on investment. You start double wide, and then in the event there's a break one way or the other, batten down the hatches, contract the losing spread, lift up the winning credit spread, contract it perhaps. There's a lot you can do. And that's what we want to start practicing, I think, at least for those of you that are leaning towards, embracing this approach. General Motors, just going to go through all of them just quickly. Now this one's getting a little hot. I'm not doing anything on this one until General Motors cracks up above that peak there. You still got strong resistance at 40. Let it do what it's going to do. You might at some stage decide to sell a put spread underneath, possibly. But again, don't get too nuts. Remember, if you go look at your trades in backtest, those of you that have done them, you'll notice that there are probably quite a few where the stock hits resistance and then falls back away, as an example. So let that happen. Batten down the hatches. You also got to practice the batten down the hatches. You know, go find your losing credit spreads, adjust them so they're double wide, and then if the stock hits, you know, breaks above a resistance level that you decided beforehand, contract, batten down the hatches, throw on the butterfly underneath, the spread to butterfly underneath, and then manage from there. So that's really what I wanted to do. It's very easy to forget all the statistics and the power of backtest and the hard data that you got. And that's where I stand with this stuff. Here's the rut.
It's about sticking to the rules and sticking to your trade plan, Mike.
Yeah. You know, remember Mike Tyson used to say, it's great to have a plan until you get punched in the mouth, you know? And it's kind of the same in trading. So you can have a plan, but if you get punched and then you start flailing, oh my God, I gotta adjust, I'm in trouble. You forget the rules. And I took boxing in college for 6 months and I did all this training, you know, I didn't touch anybody. And then the first time I boxed, somebody tagged me on the chin, eyes rolled back in my head, and then I started hitting him like this. I just lost it. And that's kind of what happens in trading. And so the only way to navigate taking a punch is to practice when you're not actually getting hit in a back-tested environment. So let's not throw out the rules. This one's fine too. We got resistance right here, just over 1900. We've also got, well, let's look at a live chart here on the rut. Yeah, so our short strike is at 2000. And by the way, Matt, what's an even 1,000 tend to be in terms of support resistance?
Massive.
Yeah.
Huge. It's actually institutional. Look at either increments of 50, 100, 500 or 1,000. They are mammoth points of support and resistance.
Yeah, exactly. So let it, you know, you get the dogs on a chain and that and it should stop. If it doesn't,
Yank
then
it back.
adjust. Yeah, exactly.
Mike, can I just touch on one other thing as well? And with everyone going through their back testing, naturally assuming everyone's putting their commission costs in when they're actually doing these back testing. Now, consider this. When you start taking a credit spread into a fly, into a broken wing, out of a broken wing, into an iron condor, and doing all these adjustments, just bear in mind as well, you still want your trade to be viable for profit. And if, depending on the size of your position and the number of contracts you're writing and your broker, you can chew a lot of that profit potential up in commission as well. So that goes back to stick to your original trade plan and try not to be emotive. We're all human beings. It's money. It's one of the most emotive things that we can be playing with. But really try and keep yourself centered to what that plan is, because you will wipe out, and I discovered this in my back testing, a ton of profit if you over adjust. So stay true to your plan.
Yeah, man. Hey, Matt, you got a really good radio voice, buddy.
Do I?
Yeah, it's like a blanket, man.
I do audio books at night.
Do you really?
Once upon a time in a land far, far away called Australia.
Oh man, you should sell those, man.
I will. See, I was going to give you a call for happy birthday, and rather than be energetic, I'd do it Ustalo.
Yeah, it was beautiful. I played it for my mom, and she really loved your girls, Charlotte and Hannah.
Yeah, thanks.
Beautiful angel voices, man. It was beautiful. Thank you very much. All right, let's take a look at Walmart. Remember, Walmart's going to have, almost said a bad word, crappy earnings in 2 weeks. They said so.
And they're sacking staff.
Yeah. And guess what? There was remember we said, don't do anything on this one. Yeah, it recovered, but still the news is crappy. Why would Walmart rise from here when they've already said their earnings are going to be less than expected? It's recovered. It's hit, hold on a second. It's hit resistance And you know, you heard Matt and I talk about this on Monday, I believe. But 135 for me is resistance on this. I don't do anything on this until this stock cracks above 135. And so far, over the last 2 days, that's proved to be, you know, beneficial. But again, don't worry about it until the stock cracks up above your resistance level. Yeah, go ahead, Hank.
Yeah, just before I came on, I was listening to CNBC, and they were saying that Walmart announced they're laying off 50% of their production workers.
Wow.
That's good.
Yeah, so the stock in pre-market had dropped again.
Mm-hmm. And look now, the markets ran up today and Walmart dropped. So this is good. I'm fine with this one. I wouldn't imagine. I got to stop saying that because every time I say that, it happens. I wouldn't
Unless it
imagine the
doesn't.
markets. Yeah, I wouldn't imagine the markets would rise in this environment, and that's what they did. So, but yeah, anything can happen. The stock could gap up. I mean, but that's bad news. It didn't participate in the rally today, and I think that one's fine. I mean, that's how I'm seeing it. I don't see anything to do on this one. Don't over-adjust. Don't over-adjust. Don't ever over-adjust. All right, UNG. This one's back up. It's off to the races again. It's bounced. This one's fine. This one's doing well. Our probability of profit is now at 89.6%. Ain't nothing to do on this one. Let it sit out there. The idea of these credits is that you basically, for the most part, more than not, you set them and forget them, take a little bit of money, put it aside, generate your 10% every 6 weeks, roughly, give or take, and then go do more aggressive stuff with, you know, broken wing butterflies or anything else that you're doing. So that's the idea of the system. Now, the last one that I'm really becoming more and more attracted to is starting with an iron condor. And so this is one that we put on August the 1st. This was Monday. And Newmont Mining came out and said they're going to slow production. It's a gold mining company. Gold is rising. The stock tanked after earnings, and gold is rising. The stock seems to want to go sideways. With gold rising, we said, all right, I think this might be a case where I could sell a put spread underneath. We sold it on August the 1st. Let's go back to that date, Monday. And the stock had already sort of was going sideways after the bad news hadn't breached the low of its day. And there was every reason to suspect it would keep doing that. And so we put on an iron condor, a long-term bear call spread up top, and then a long-term bull put spread underneath. And now our potential profit on the trade is 15%. Now, one credit spread would only get you around 10 or 11. Half that, 8. Half of this and less. So it would be like 8, like 6% or something like that. So we get a bit more return on investment potential. And now we just let it do what it's going to do. It's an 81-day trade. Time's working for us. The stock rises, contract here, take the profits from this winning put spread, roll it up to support, maybe contract, maybe add a couple more, and generate a a trade where you can move the risk around and turn a losing trade into a profitable trade. A lot more facility to do that when you have an iron condor. So that's what I've got for today, everybody. And now it's time, and I'm hopeful that we got some people that want to share. But what do you got? What are you looking at? Hey,
Well,
Dennis.
Mike, while we're waiting for a few hands, I just want to raise something. Just going back to the commission costs. Emmanuel typed this into the chat, and it's very relevant. And you teach this, Mike, and challenge people to do this. I think it's in week 2 of your HFM mastery. Call your broker and ask them for a commission reduction. And I know when I did it, I got one. Emmanuel got one. Catherine has done the same thing. So it is possible. So in that regards, do it. Challenge the broker. Pick up the phone, give them a call, and ask them for a cheaper commission cost, because every dollar in your pocket is better in your pocket than it is in theirs.
Yeah, and tell them you're going to go to Tasty Works. And then
Especially if you're with Think or Swim.
Yeah. Yeah, Tastyworks has some really favorable commission rates, especially if you're doing broken wing butterflies. A lot less than some of the other brokers. Not that we're recommending brokers. So do your own homework. We're not allowed to recommend brokers. We get in trouble for stuff like that. But
do,
your
we do.
homework. Yeah, you can go shopping
And-
for better commissions.
And to the wider community, we got some feedback as well, just around the platforms that we demonstrate on, specifically how Mike uses Thinkorswim, and I have also demonstrated on that platform as well. And we're aware that in AusPac that that platform isn't available. And the question came through: could I potentially demonstrate on an alternate platform? So I'll now start using Interactive Brokers, which is my primary broker here in AusPac that I use. I do have Schwab as well, but their paper trading engine, I don't really enjoy. So therefore, we're getting, again, not a broker endorsement or supporting a broker, but so we're getting a good mix of examples across the platforms. I'll now do my examples in IB, and Mike will use Thinkorswim.
Excellent. I like
We've got
that.
2 hands up, Mike. We've got
All right.
Paul and Andrew. So, Mr. Story.
Let's
Yeah,
go to
if I
Paul.
can, I'll just jump over to, I think I'm missing something. Share, there it is. So just, we talked before about what I was following, and it was this list of, these are all basically iron condors, which I am paper trading, and most of them are behaving as they should be. And then the one that let me just have a look here. Silver went a little sideways, but what I'd done is with the bottom side of it, I moved it up a little bit. I added a little bit more risk, but I increased the credit on that, and so I think I'm going to be ending up taking a little bit more out of this guy.
Paul,
And-
Paul, can you show us the legs? I'm interested to see what exactly you did to
Yeah.
get more credit. Yeah, thank you.
I think I only moved the one. So yeah, I just
Okay.
moved one, the 1550 up to 16. So just a small amount there.
Yeah, and you brought in another 4 cents on
Oh,
that move.
okay.
Something to look at. You want to look at that when you're doing, even with broken wing butterflies. Keep an eye on the benefit that you just got by adding 50 cents times 11 times 100 more risk on the downside. You only got 4 cents. So that's something to consider when you're
So this-
doing.
Okay,
Yeah.
so this is one that I probably just should have left for a time being, until such time that there was a opportunity to make a big move, if there was an opportunity.
Right. One way to see it, yes, exactly. One way to see it clearly is if you turn off the adjustment leg, that there's a little checkbox right above the max profit. Right, it's right on your screen. You see where it says
Turn
none.
off.
Yeah, there.
Okay.
And then if you hit the risk graph button, it'll turn off the adjustment. So you went from 1430 was the original risk, and then hit the risk graph button. The green risk graph button.
Green
top
risk graph. Yeah.
There you go. And that'll turn them off. So before you did the adjustment,
That's not really doing it.
we're not on the date. We're not on the 29th. That's
Oh, we're not on the date. Yeah. Okay. Well, I will have a look at that. But if you recall, I think on I had asked before. This was my initial top side of that iron condor, and then it jumped up on. I think this was the 20. What's my date on that? I can't quite see.
29.
29. Okay. So it jumped up, and then I asked you the question of what my next activity was, which I should do that. And then to follow this along, my plan was to contract and turn it into a butterfly and give myself some time here. So that's what I did. I contracted the I sold an extra one. I waited until it hit the break even, and then sold the corresponding thing. I may have done an extra trade in there, but anyway, that's where we are right now. I've reduced my risk from $1,000 on this to 384, and now it's just wait and see.
Yeah, that's beautiful. One thing that's missing that would have made your risk even less than 384 was had you started double wide and then contracted. That would have also dropped your risk quite a bit as well. You maybe down to 250, maybe another $100 of just guessing, but so you had a
Yeah,
Yeah,
just
so
when I look at this, I think I did, and I may have I did something with the 1850 because I think I started with the 20 and 1850, and I've just been mucking around with it as I go. But from now on, as I move into these things, I'm definitely looking at having the extra space between the strikes so they can be contracted and then a butterfly go in.
beautiful.
So good. Thank you. Thanks for letting me share that.
Yeah, that's great, man. Thank you for sharing that. That's awesome. It helps everybody. Let's go to Andrew. Yes, sir. What you got, buddy? Andrew,
I'm
There we go.
got you
Oh,
now.
is the, okay, I gotta hit the share button. I keep on selecting it. Okay, so is it visible?
Yeah.
Sure is.
Okay, this started out as a 24-hour earnings trade on Roku, and Roku proceeded to not cooperate.
Mhm.
And you see, yeah, I'm on 720. So that's where it opened. So we're up at 85. Earnings was, well, they're not going to tell me anymore. I think it was on,
The 28th, right?
yeah, must
Yeah,
have
you're
been on the 28th, because so go to the next day. That's not what I meant to do.
I'm going to pause you for a sec, guys and girls. This is not a hedge fund strategy, but what we're about to discuss in terms of what to do with this trade can be used in long-term credit spreads as well.
Okay, because what I did was I went to an iron condor eventually. Because what happened was I got whacked when it dropped down here,
Mm-hmm.
down to 65. So at that point, since I had a trade which was expiring that day, I proceeded to close out everything on the bottom, which I very simply had to do. And I proceeded to roll it all out. You see if it's in there. I rolled everything out to November.
Anyone do me a favor, buddy? I'm sorry to interrupt you, but I want to make sure this is valuable for everybody.
Mhm.
So could you go back to the 29th and turn off the adjustment so that we can see what you were dealing with when you decided to adjust, and then I and others can give you another set of eyes on what might have been possible as well. So the thing about these 24s, man, if the stock gaps, sometimes it's over. And in this case, it's over. There's nothing to do. You're already at max loss.
Yep.
No, you're at, let's see, you're at 295 max risk. That's your current profit. It's done. There's
Yeah.
really not much you can do.
I guess what it turned into is it went away and I just moved on to a new trade.
You don't have, and the thing is, you don't have any time left either. The expiration is on the same day. So you can't even leave a call option to maybe have a lotto ticket or something. Or these
Nope.
are all, yeah. There's nothing you could have done here.
Yeah, that's the
thing.
big problem with a 24-hour. You either
Yeah,
it works or it doesn't.
I was Clayton and I were spent an hour today together. Clayton, he's on. I don't know if he's on the call today, but he does a lot of these, and I've had people back test them. Andrew, if you do, let's get some muting going on here, please. If you go and do back testing on these, you're going to get smacked around on some of them, but over time, the winners will outpace the losers. Historically speaking, that is usually the case when people backtest these. So if you like them, I like this kind of trade. I like the wait till 410 and see what the earnings were and see where the stock gap to, and it's really kind of gives you a lot of juice if you like that sort of thing. But you're going to get hammered from time to time. And
Yeah,
but
and
over
that's what I
history, though,
remembered from last year was that they on back testing, they worked wonderfully. So this is my
Yeah.
first one this year. And it was fun.
Hey, Andrew, please tell me you didn't use a market order on this.
Oh, no. Oh, no.
So I'll just, it's relevant to the wider piece around orders and limit orders. I can still remember very early on, and I think it was Christina when she came to present in Melbourne, and the message was loud and clear: never, ever, ever use a market order as part of, well, generally speaking, right? Unless your bid-ask spread is super tight, never use a market order. Now, not talking specifically about the system, but one of my biggest learnings through that is I traded this system once. So the strategy here is short-term credit spreads. I had a market order to close on the condition that the stock breached a short strike. Now, this is where it got extreme. My trade was on Zoom right in the middle of COVID, and Zoom popped out to 400. What happened is, whilst my max risk in TTR was limited, I actually got filled at 3 times my max risk because the option price jumped so much, and the market makers just took me to the cleaners. So that is a real world experience that I want to share. It cost me a lot of money. And my point is, never, ever, ever use a market order to close on a condition, ever, because it can bite really hard.
Ever. It is actually possible. Let's say you got a 2-point call spread up. You got a 1-point put spread on the bottom there, the 74.73, and you want to buy that back. The max value of that put, the 74.73 short put spread, the second and third lines down, and the yellow ones, that has a maximum value of 1. You could put it, the broker there would be very happy to sell you that or have you pay $1.10 to buy back a $1 spread. And so, great point, Matt. You never want to use market orders ever.
No.
In a multi.
In my example, I bought that for $3. So,
God.
Anyway, life goes on, but it's part of the trading journey, right?
Yeah, that's criminal, man. That's terrible.
I'd rather share my experience so no one else gets bitten in the ass like I did.
Sometimes I feel like you've seen those Rambo movies where he's coming out of the jungle and he's cut up and it's dirty and no clothes are ripped. That's how I feel sometimes from my journey through trading. Ready, aim, fire. Ready, fire, aim. I should say ready, fire, and then figure it out later. Was my I got blown up many times and learned a lot of this. So yeah, good point.
Yeah. Thank you, Andrew, for sharing.
Yeah. But I guess as you can see on the cost of closing that, I did have to pay more than it was worth. But that was, I just kept on throwing limit, orders in until I got it closed because I knew I did not want to go through expiration with it because E-Trade would assign me, and that'd be the end of it.
Now let's talk about that. This is really good that you raised it. Both options in this case, your puts, are deep in the money, right? Let them be assigned. Take assignment. Your long put will be auto assigned, and it's in and out of your hands without touching it. Let it take assignment, and then you're going to be assigning your legs too. The whole thing washes out for max. Just let it expire.
No. I have it happen to me. What they do is in the case of the 74, they'd be having me buy 500 shares at $74. And the 73, they would go, it's expired. You're done.
No, it's not supposed to work that way, man. You better find another broker. That's not how it works in the brokers I
It
use.
shouldn't.
No
It
way.
shouldn't work that way, but I've had that happen to me twice
What
now.
broker? What broker is it?
Schwab and actually E-Trade, I asked them the question and they said that I would get assigned.
And what would they do with the long? Would they say specifically about what they do with the in the money long options that expire?
It expires.
Worthless,
Yep.
but it's worth something.
I know that. I argued with them and eventually I said, okay, fine. I will never, ever allow these things to expire. I will, in the money.
Well, I do it all the time, and I don't have that problem. I've never really traded with Schwab actively, so that's
Okay.
very surprising. I don't want to scare the entire community because that's not the behavior I've ever experienced, but I've never really traded with Schwab. So maybe it's a Schwab specific thing.
Yeah,
That's
it's
crazy to
it
me,
was one
man.
of those things of, once it happened to me once, I never allow anything to go through in the money.
Mhm.
I just say,
Okay.
fine, I have to close it out. If that's the safest route.
Well,
because-
sometimes there's making business decisions, for the sake of your brokerage account. And I'm not suggesting changing brokers, but I don't know anybody else had that experience with brokers they use. I haven't.
Yeah,
I've
there's
never.
it's spurring a bit of conversation on the boards, and you can read those comments for yourselves, everybody. We can't recommend a broker, but what I suppose the best way that we can assist our community here is to encourage them to challenge their broker on how they handle exercise and assignment around their obligations and what they're actually meant to do. And if they find themselves in a position, raise a complaint or look to change a broker. Because that's the whole point of an options contract. There's rights and obligations. So if they're not meeting them and they're not exercising them, then that is something that we would encourage you to take up with them directly, or alternatively consider other broker options.
Yeah.
So Matt, would they have that written down in their policy somewhere and conditions
should.
of service?
Yeah,
They should.
absolutely. Yeah, no,
Mhm.
definitely they do. Yeah, absolutely. If you go and you do a general Google search, that's the way in the money options, long options are supposed to be handled, auto assign.
So that'd be pretty
Always
black and white then, wouldn't it? If they're breaking their own rules.
Yeah, like I said, it's the first I've heard of it, and maybe I'll do a little research myself, see what I can find out, or the community. Maybe the community does that, and that's
Well,
one thing I would get, but-
you're all welcome to share. You're all welcome to share ideas and feedback on your broker experiences between yourselves. But unfortunately, myself, Hank, Mike, Gerardo, we can't provide guidance in terms of which broker to select.
So use the community, everybody. That's the point, right? Band together. It's not all about us contributing to you. It's you contributing to each other. When I say us, I mean me, Matt, Hank, whoever else is going to be taking these webinars. It'll be me for the foreseeable future, and I'll continue to be here. But really, the power in this group is for you to share with each other. We can't say certain things because we were in a position of liability, and but you can speak freely to each other. So I would say somebody start some research and see if you can figure this issue out.
I do it all the time on toss,
Mhm.
where if they're both in the money, I save commission costs.
Mhm.
Yeah,
Mhm.
that's what I'd love to do. That's what I used to do on Options Express way back when,
Yeah.
before they got eaten by Schwab.
I mean, if you
And
have
then you're
a
only
long,
exposed to your max. Sorry, Sue.
isn't it the law that if you have a long, there must be someone on the other side of that that has a short,
Mhm.
which is then going to be assigned.
Correct. Correct.
So, yeah, that sounds weird.
It sounds weird, very weird, extremely weird.
I was surprised when it happened to me.
Yeah. Wow, man.
So look, that'll be a good discussion. See play out on the board. So again, we encourage you to do so. Share your ideas. In Mike's, I've been asked this question, Mike. So I'll answer this, and then we'll go to Don. He's on the phones. So I've been asked, what's my experience with IB? In my experience, I'm not saying this is in their policy. In my experience, I have been auto exercised and or assigned. In my experience, I encourage you to do your own broker research.
Yeah.
Andrew, thank you for sharing, mate. That was fantastic. Mike, let's go to Don. He's been on the phone with his hand up.
Over to you, Don.
Right, let me share. So Mike, I was, last week, I was playing with the stock screener. Let me make sure I'm pulling up the right screen here. I want to do this, here we go. Hopefully this is the right one. All right, are you seeing my micron trade here?
Yeah, we see it.
Okay, so I was playing around with the long-term puts, long-term credits, and I stumbled across Micron Utilities, Micron Technology, sorry, and came up with this credit spread long-term, and I said, well, I don't like the short on this. I'd like it to be higher. So what I did is I went over into the stock chart and I looked at Micron to say, okay, let me look for some support and resistance levels. Obviously, resistance is 75 is pretty solid with the 200-day, right? Even the fib at 50 and some prior, closes on the high side. So what I did is I went through and took the trade, and I actually raised the short to 75. I apologize, this is the current day, and went to 80, knowing there's a 77.5 in between. So, our rule around, making sure you have enough room to compress. When I initially did it, it was 46 cents. So it was a 9.3% profit. And you taught us, look for something over 10. And I remember something that Hank said, ask for more. So I shaved it up to 48, right, to get over 10%. And it got trade. And this is where it is today. I still think Micron, my prognosis is I think they're still going to have a tough end of year with the chip semiconductor computer industry. So I'm still feeling pretty good about this trade and the fact that I've got a 75 as, my short. So I've got a pretty high break even, right? So that was it.
Thanks for sharing, Don. I actually think it's a solid trade, mate. You've got 70 as price resistance to the upside, which is a nice round number. Whilst it's only just closed above the 200, that's okay. I'd be comfortable with that with 70, and then you've got your 200 right at 75 as well. So I think it's a trade that's in good shape, and good on you for asking for more. Why not? Go shopping.
Oh my God, that was awesome, man. It was like words that I would speak coming out of somebody else's mouth. And this is exactly what I would have done. I think it's a very good example of a lot of stuff, wider spreads, doing your own support resistance analysis, asking for a bit more credit. You did it all. It's beautiful. It's like a cigarette risk graph.
Starting to sink in finally. Hearing all this stuff, I'm starting to sink in. So I think I'm starting to make better trades. So
how are you feeling about your trading now?
I feel much better. I think I'm just, repetition, I think, is the key, Mike. I've been I took your courses and other courses right through the mastery program, and just, you got to hear it over and over again. And it just, it works its way in. And I'm now understanding how the Greeks, move and what to look for. And, I can understand visually the risk graph when I can, I can visualize, I'm moving my risk graph to the left or right. So it's, and I don't have to think about it. So
Yeah,
it's getting better. So
that's beautiful, man. I've said this before. I don't know if in this group I have, but the reason I know as much as I know about options is because I put myself in a position to teach it in front of a lot of people. And there's a lot of power in preparing yourself to teach something. And I was talking with Hank and Matt about this, but what I have this idea where we give somebody maybe a 10-minute slot and they present like you just did, almost precisely what you did, but give people the opportunity to teach a little tidbit of a technique of some sort of strategy, and we can start to have people step into that world a bit, and that dramatically improves your distinctions and facility around all these moving parts. So if anybody likes that idea, let me know, or any of us know, and we can set you up for like a quick presentation.
I think that's sort of the definition of how to master something. First you learn, then you practice, and then you teach.
Yeah. That's it. That's kind of like the next progression. I remember I was in London and I was teaching an advanced ICT, and Nick and Christina, who I was teaching with at the time, this was probably 20 years ago, 15 years ago. And they said, I want you to teach Greek risk graphs. You can actually show risk graphs of theta, vega, gamma. You can actually generate a risk graph with that. I'd never done it. So I stayed up all night because I had to teach it the next day, and I learned it and I taught it fine. But I don't think I would have learned it like that had I not put myself in a position to speak it in front of other people. It's extraordinarily valuable. And it can be kind of scary too, I had a lot of fear around it, and and it's a safe group, and you can, if you want to play there, let us know, and we'll give you the mic.
We're a safe community.
Yes.
That was fantastic, Don. Sensational trade, mate. Well done. Congratulations. Michael, we're going to go to Peter now, who's got his hand up and been waiting patiently.
All right. Peter Finder.
Yes, hi. Unfortunately, I can't show the trade. I don't have a way to share the screen. I'm on the phone still at work, and don't have access.
I love multitasking, trading and working.
Do you have any patients waiting for you?
No, so I finished my patients, but if I would be driving home at that time, then that would be I would not have a ability to attend this meeting. So I'm staying in my office and but I don't have any access to the computer. So, but I wanted to talk about the trade I put on QQQ, which today broke the break-even point for the first day, and I checked what would be possible. I checked it yesterday. I didn't check it today because I don't have access to the computer. But if it would break, then I would have to adjust it, and by lowering higher strike and squeezing it. And I found out yesterday. I'm not sure how it's gonna look today, but that the graph would reduce, of course, delta and the maximum risk, but in the same token, I would lose anyway to profit. So it will be only the reduced maximum risk, and there will be still minimum. The maximum loss, and there will be a minimum loss. There will be no profit whatsoever. So I'm questioning myself. Should I know that QQQ looks like it's overbought. It's way above 10 moving average. It's time, and we all know that that it shouldn't go that high. So I'm kind of hoping right now, which is, I know it's bad, but it's just, I'm hoping that it at least will pull back to. So I don't know. Should I adjust it or just give it a day, another day, to see if it's gonna go again up, or maybe slightly down, and then maybe adjust. And so I'm confused.
Well, good. Thank you for being vulnerable about that. And so you're now waiting, hoping that the cues, here's the cues. You're waiting for the cues, hoping for the cues to drop. Everybody does that.
My
Here's-
break even is at 320.26.
What's
So
your
it's-
short start? You got short 320 calls?
Yes,
What's the upper call, the long one?
322.
Okay, so you do have the ability to contract. Okay, that's good. So let me
Yeah.
finish the point I was making. So you're looking at this going overbought. Let me find an indicator to suggest the cues are going to drop, and you're going to hope that tomorrow they drop. Okay, that's a normal default human approach to everything, and it doesn't work in trading. What you want to do is assume tomorrow the cues are going to rise, assume the worst, and adjust towards that. You got to do that. Everybody, it's one of the hardest things to do in trading. I still, to this very day, that's my first thought before I adjust. Well, I think it's overbought, and that was just a reflex. It was a cat chasing a laser pointer, and I got, oh, it just shouldn't be happening, and I think it should be dropping. I'll go there every time, and then, okay, we're going to lose more money. What do I do about that? And then adjust to that. And so that's what I would do. Two things: just follow the rules, contract the 322 down to 321, butterfly it. You can do a put credit spread or a call credit spread, doesn't matter. Same, sell a upper, buy the lower, whether it's calls or puts. It could be an iron butterfly or a long butterfly, doesn't matter. And then start looking for broken wing butterflies. And while you were talking, I was about to do that, and then I ran out of time. So what I would do.
So butterfly it first as a balanced butterfly?
Yes.
Okay.
Yes. Contract, squeeze the risk out, throw another spread underneath it, whether it be puts or calls, doesn't matter. Actually, puts and calls, one might be better than the other. You can actually find a few more cents perhaps, but you might try both and to see which one gives you the better risk graph. So you would take your risk graph out of the tools, and then you would duplicate it, and then do it twice, and then try calls and then puts as well, and see which one gives you the best. The quickest way is to see which one gives you the best ROI. You might get you could get 40.4% more ROI, a slight more ROI by picking the more favorable spread. So that's the basic move. You'll be delta neutral, and then you wait to see what the cues are going to do after that. And unfortunately, we can't show it because we don't have the trade. But then you have a delta neutral proposition. The cues can rise and drop, at least for the short term. And then if you start seeing more bullishness, maybe it breaks above this peak here, and then you can start to think about taking off the upper spread, converting it into a bull put spread or a long call spread, depending on whether you have calls or puts. And then while you're doing all that, start looking for broken wing butterflies. And it doesn't have to be the cues. It could be any market index for the most part. And so,
And
right now,
broken wing butterfly would be just as a separate trade, just to offset the loss from the other one, right?
exactly.
Okay.
So what I would do here is, and this is a really good discussion. Thank you for raising it. What I would do is start looking. I'm assuming the cues are rising. All right. And so I could look for both as well. I would look for both. But if you've got a balanced butterfly on and the cues keep rising, ultimately you'll start losing money. Or if it drops, ultimately you'll start losing money. And so we need to be ready for that. And you can be ready for it right now. You do the contraction, batten down the hatches, contract, butterfly, delta neutral. And then you have a small amount of money that you've contained your risk to a very contained amount. And then you can go out and try to make that back with broken wing butterflies. So you're not necessarily going to find, let me just show you. I don't know what I just did.
Similar what we discussed I think last week about FedEx.
Yes,
Okay.
exactly. So you could try right off the bat. Well, is there a bullish broken wing butterfly on the Qs? We can see. Nope. Let's pay a bit for the broken wing. Search. Nope. And then maybe even more bullish. Search. Nope. Oh, there is one. So here you have one. And the risk on the downside is $16. That's okay. You've got credit down there anyway. And then come in here. And now you have a trade. Now it doesn't look so beautiful here, but if I was to, and I'm going to do it, if I was to zoom in, let's zoom in from, let's say, 280 to 410. I'll zoom in, 280 to 410, chop off the last 2 days, and then you have a trade now that in the event the Qs continue up, then you're making money up here.
Mm-hmm.
All right, this profit here will offset the risk that you have in the balanced butterfly, the adjusted batten down the hatch version of your original credit spread. And so now you're making money up here. And then you want to size it, you know, whatever your risk is in the upper wing, maybe it's, let's say it's $250, then you might just do 2 of these. And so this max profit with 2 days to go. Now you might have more or less, but that's what we're assuming. There's still 2 more days of additional profit, but that's sort of like really the most you should expect out of this trade. And so you get a potential $260 of profit here. You're risking another $32 down here, but down there you're making money on your broken wing butterfly, your balanced butterfly. So that's the idea. It's a second trade. And then you might say, well, what if I put one on the bottom too? Let's see if there's one on the bottom.
Mm-hmm.
And there is. And then you do this one. And this one's only $2. Don't worry about expiration on these too much. And I'll show you the 2 trades now. This is what I would do right here. It's a little narrow there. You see that? I went and I didn't really distinguish it. The butterfly is quite narrow down here. I don't see a lot of profit. We'll zoom in anyway and see what it provides us. Let's go from 220 to 340, 220 to 340. You want there to be a decent body so you can make some money. That's actually good. So I'm glad I zoomed in. So you got this one on the bottom. You got this one on the top.
Mm-hmm.
Now, if this goes anywhere, you're going to make some money. You're going to lose money on the originating butterfly, but you can adjust that too. Put that aside for a moment. But now you have a trade that's making you money in the upper wing of the originating trade. And then you have another that's making you money in the lower wing in the originating trade. You have surrounded the stock. You have checkmated the stock. And there you have a very, very good chance of turning what's a losing trade into a potentially a profitable trade in the end.
Can you overlay those 2 trades?
Yeah, I can. Let me do it.
In one point, do you close the upper or bullish or bearish broken wing butterfly, or you just let it expire worthless if it eventually goes one or other way?
You manage the broken wings just as you would any other broken wing.
Mm-hmm.
Then you're adjusting the 2 broken wings, just like you would any other broken wing, and then you're adjusting the balanced butterfly as well. And now you got 3 trades, and now it becomes more complicated. Now you're in a street fight, and you got to manage.
So now it's time to quit my job and do it full time.
No, I didn't say that. No, I'll never do that to you.
Time to do it. That's what.
Yeah, but it's good to practice it, you know?
Yeah, you're right.
Sue asked me to overlay these, so I'm going to do that quickly. Then I got to run. I'll leave it with Matt and Hank and everybody else.
Sure.
So
Thank
there's
you. Thank you so much.
Oh, you're very welcome. Thank you for bringing that up. I love that you brought up the you know, the hoping part that few of us will admit. Every one of us does it.
Yeah, I didn't want to use the word hope, but it is what it is. It's deep in my mind, the hope that it's gonna drop down and yeah. And
Yeah.
and that's what we are vulnerable for. Yeah.
Mm-hmm. Exactly. All right. So I'm
Mike,
gonna
just before you're
overlay-
doing this, sorry, really quick question came through from Emmanuel. He's suggesting 2 trades. Why not take the initial trade straight into a broken wing? These are a hedge off against the initial position, correct?
Yes,
Rather than adjusting the initial trade. Yeah.
that's correct. Yeah. So these are
Thank
two
you.
additional hedge trades. So using the broken wings as a hedge. Now, what I want to do now is overlay these two, and I've got them both saved in a folder. And the thing we're going to see, though, is that the expiration dates are different. And that's okay. One's a shorter term trade, and the other's a longer term trade by 2 weeks or so. So the overlay is not going to be super pretty, but you can still see it. And here's how you do it. So I've got one trade here, bullish. These are both saved in a folder. I've got a bull BWB trade here, and then also in the folder, I have. How to find it? There it is, and there's the bear. So both of these trades are in this folder. Okay, that's important. So both of these trades are in this folder. This is the one that's active. This is the one that's still in the folder. These are the purple buttons we're going to use now. And now what I'd like to do is overlay this trade that's still in the folder and not on the screen on top of this one. So that's the first step. And then you click overlay. And what it's going to do is overlay the 2 risk graphs. I didn't do it. Did I?
Should I be getting excited to see this? I'm feeling excited.
Are you?
Yeah.
Good. And it didn't work.
That's what happens to me.
It does work though. I've used it all the time. Let's try
You
pairs.
just it there, Mike.
Huh?
It looks like you had it. Said left and right and identified them.
I know.
When's your days to expiration? Oh.
The day's expiration is off a little bit. I know. I'll show it to you though. I can actually force it a bit here. Let's make, just for the sake of argument. This always happens. I get excited and I can't leave.
Mike, while you're doing that, I just want to, Catherine asked a question about 20 minutes ago in the thread around the rut trade and whether or not we would adjust that. Catherine, you called out you're short at 1950. We're short at 2000 on that trade. And our position at this point in time is to just sit on the trade. If you are short at 1950, then you may want to consider starting to contract your upper spread to squeeze some of that risk out. So just a point of consideration for you. Happy for you as well to post it in the thread, put your trade on the boards, and we can take a closer look and give you some more feedback. Back to you, Mike.
Thank you, sir. I'm going to make the expiration dates the same. I'm not even sure I'm convinced I have the proper trades here. I'm just going to make the expiration dates the same. Let's see here. Okay, let's update that. Forget that the risk graph probably doesn't look that good because I've modified it. Oh, it does look really good. Because there's no expirations there. Sue, I'll show it to you next time. I don't have time today, but I'm happy to do it. Essentially, as I said, the idea is you have 2 trades. You have one loaded, and then you find the corresponding trade out of the folder, and then you put it here, and then you click overlay.
So
That
one
would-
is current and one has been saved already.
They've both been saved.
Okay, because I've been having trouble trying to do overlays, which was the reason I asked.
Mm-hmm. Yeah. Well, I'll tell you what. By tomorrow, I'll be ready. I can show you some. I'll have something prepared and make sure that I make it really easy for you to see it. But
Thank
it does work. I do it all the time. You are very welcome. All right, I am going to stop sharing, and I'm going to leave the conversation. Leave it with Matt in Matt's capable hands. Hank's there too. We got Gerardo. So thanks everybody. I'm loving this group. Have a good however long you go. As long as you like. Bye everybody.
Wonderful. Thanks, Mike.
Thanks,
Thanks
Mike.
everybody. Have fun.
Terrific. You too.
Matt, that overlay, because I've entered that portfolio of all the credit spreads separately, just so I can look at them separately. So that overlay is going to be very handy for me to see the entire how the CONDORS would look. So
Absolutely.
I'm going to be doing that.
Because then you can put them both together to represent what the iron condor looks like. Yeah, because we know that you track them separately, which is great.
Yeah.
Thanks, Paul. John, you're sitting there with your hand up. How can we help you today, mate?
Good morning.
Hello.
Yes. Can you hear me?
We sure can.
Okay, I've got to hit share screen. Why aren't I seeing? I'm looking for my trade.
Okay.
I don't know why it's not. I don't know why it's not coming up on my screen here. Just a moment.
Sure.
Okay.
Thanks, Emmanuel.
Okay. Can you see that? Matt,
I can't. No, not at the moment.
Hang on. I've got it on my screen here in front of me, but I now seem to have lost the. Let me try again.
Sure. Can you see your Zoom menu that gives you the option to also share the screen?
I can see the trade, and I'm clicking it, but you're not able to see it yet, right? Can you see it now?
Yes.
No. Oh, hang on. Here we go. Yes. Yep, we've got it here. ABBV.
Okay. Sorry about that. Look, this is the ABBV trade that I talked briefly about in this session last week that Mike said was like a dead date. And he was quite right. This was a bull put credit spread that I'd entered, and straight after entry, the stock took a drop in the wrong direction. And as a result of the back testing I'd done through the hedge fund mastery course, I was concerned that letting the trades go to their short strike and then closing out as we were doing in those days, the loss was fairly substantial, roughly 3 times the average income on a $500 risk trade. So I decided that if the stock was heading in the wrong direction and approaching the outer limit of the second standard deviation, then I would standard butterfly to reduce the risk. And that's exactly what I did earlier on in this trade. And then I was looking for broken wing butterflies to provide a hedge against the direction, but I wasn't able to find any using any of the radio buttons. Okay, anyway, when we were here last week, we had earnings coming up on Friday the 29th, and Mike said one thing you could consider prior to earnings in the event that there's an earnings drop would be to buy back the short puts in the butterfly. At the moment, at that time, the maximum risk was $101 on this trade. And going into the end of the day on that Friday, there was a slight drop by the end of the day, and there was a $75 loss. Now, I hadn't actually bought back those short puts, but I want to now show you, if I can, the exercise where the short puts were bought back the night before earnings. Are you able to see this trade, Matt?
Yep, we sure can.
Okay. This trade shows buying back those short puts, so just leaving the 2 long puts the day before the earnings announcement. The debit goes up and the maximum risk goes up by $56. But because in fact the stock did drop on the day of earnings, you ended up with only a $29 loss versus a $75 loss by not buying back the short puts. And the other thing is, during the day, the stock actually had quite a drop. And
Yes.
if you were watching the stock during the day and you decided to exit towards the bottom, you'd have made about $100.
Mhm.
And as you and I both know, Matt, watching the stock during the day US time is not really conducive when you're living in Australia.
Yeah, it makes it a challenge. Did you have a
Yeah.
did you have a day only order to sell this for a profit or a break even?
No, Matt. I living here, I look at the US market in the last 45 minutes of the day. So at 5:15 a.m. our time, usually I log on and I just close the trade out towards the end of the day, and my loss was about $70. But if you had been watching it, if I'd bought back the puts that, as Mike suggested, was an opportunity, then you could have made a bit of money.
Yeah. Yeah.
And certainly, even if you waited till the end of the day, the loss was a lot more modest.
Yep, I think it was a good adjustment. The only thing that I'd call out is if it blew the other way, you did open your risk up a little bit. And based on your position size, you were happy to accept that because it's still less than what you initially started with. But being able to close out with a $29 loss overall is a good outcome.
Yeah, but the reason I didn't, in practice, buy those puts back, this was the example showing Mike's recommendation, was if there was anything guaranteed to make the stock jump on earnings, it would have been me buying the puts back. based on my sad experience.
Very good. Well, that's a good outcome. Well done, mate. It's good that you were able to close that trade out for less than what it was, bought your shorts back, and ended up in the position that you did at the end.
Yeah. Okay. I just thought people might be interested to see Mike's recommendation in practice.
Yeah. Thank you very much, mate. We were just asked as well, would you mind just clicking on those offsetting legs? Some of us in the community wanted to see what those legs were.
This is
there we go.
On the understanding that you're buying back those legs, buying back the shorts, the day before the earnings announcement.
Yep. And one other thing you could do as well, John, I know you're trading the last 45 minutes of the day. I generally do the same thing as well, making all my adjustments, being on the other side of the world. If your prognosis is the stock is going to drop, you could also consider a day only order to sell this at, say, break even, depending on what your risk graph analysis looks like. So you might have even made that $29 back, or be a bit cheeky and maybe try and sell it for a $5 or a $10 profit, because through that trading range of the day, you probably would have got that. But nevertheless, you still ended up in a good position.
I generally do that, Matt, in practice. If I have the opportunity to get out of the break even or slight profit, I'll put in a day only order for it.
Good stuff. Thanks, John. Really appreciate you sharing. That's great.
You're welcome. You're welcome.
Does anybody else have any questions, comments, or something they'd like to share?
Yeah, Matt, it's just a question for Gerardo. I was wondering if there's any way to archive or extract information from the WhatsApp feed without writing it by hand, like getting it into some kind of Word document or anything like that, or is that not possible?
What's the purpose of doing that?
Well, because if you want to go back and find something, which is a fair way back, it's pretty well impossible. Spend maybe a couple of hours just trying to find something.
Let me check that, but I think you have a way to select some messages. Let me confirm that.
Yeah, even if you could just select them and copy and paste or something. I don't know the technicalities of it. I'm not a tech person.
What you can do, what you should be able to do is when you go to the group at some point there, let me just look to confirm. But here, snipers, if you click snipers at the top on your phone, and it'll say media, links, and docs. And then if you hit on that, it only has the, can we see that? I don't know. Then it's only got the photographs of the of the graphs that we put on. So from there, you should be able to get to a point and maybe choose a date or something like that. But yeah, then we'll have the date in which something was entered.
Are
Yeah,
those,
correct. That's an easy way to go through any file like pictures or videos. And the other way you can do it by you can select any message you want to see later, and once you select the message, you will see a star on top of your screen. That's to add it as a favorite. So then if you do that, you'll be able to see it later on your favorite messages. So you go through the same way Paul just explained, and then you will see their favorite messages. And you open it, and you will have right there all the messages you
I
select.
see.
Sorry,
All right.
Gerardo, I might just jump in. John, you're still screen sharing. I might just get you to stop that before you open up your banking or something that you probably don't want us to see. Thanks, John. Sorry, Gerardo.
Yeah.
Thanks, John. All gone now.
Tomorrow, what we can do tomorrow, I can connect to the call through my phone, and I can show you all sharing the screen how you can do that.
Yeah, that would be great.
Lucian, Johnny White's also just posted in the chat there. There's a link on potentially how to export messages from WhatsApp. There's also a search function in WhatsApp as well. So you could potentially search and type in a ticker if you remember a particular ticker reference of something that you wanted to look for, or maybe like BWB for broken wing. That search function lies within it too. I know why you want to do it, and it makes sense. So let's see what we can come up with.
All right. Thanks, Matt.
No worries, Lucian. Okay, anything else from the community today? Fabulous. Well, look, thank you very much, everybody. On behalf of Hank, Mike, myself, Gerardo, look, another wonderful session. Thank you very much for all of your contribution. We're getting some great conversation happening. It takes a lot to, put yourself in a place of vulnerability to share, but we hope from what you're seeing here, by doing so, there is a great benefit as well. The participation's great on the boards. It's great in these forums. It's great in the WhatsApp group. Please continue to post, and we will do our best to serve you and answer you as quickly as possible. I hope you all have a fabulous day, and I look forward to seeing you on the boards, and I'll see you next week. Bye.
Hey, Matt,
Yes, Sue.
Matt, I just wanted
Yes.
to thank you for hanging in there when it's way past your bedtime and not being in a rush.
You're most welcome to. No worries at all. It's what I do. It's a passion that I have for the markets and for trading, and also.
Sing you a lullaby, I think.
No, good night, everyone.